A very good morning to everybody and welcome to today's webinar where we'll be taking you through a demonstration on Boma and Wolters Kluwer business fitness and an update around the new rules around property investment. Just a little bit of housework before we get started is what you'll see on your screen is you'll have a GoToMeeting panel. You can click on the little orange arrow at any time to open that up. At the moment, most of you are dialed in using your computer audio. If there is any trouble with the sound, you can change to phone call, or as it says over here, you can try logging out and back into the webinar. All of you who have registered will receive a copy of the on-demand recording within 24 hours. The way that we communicate is using the questions panel. It's important for you to know that you are on mute. What that means is that anyone facilitating today won't be able to hear you or any of your background noise. So if you're in a noisy location with, who knows, with today's climate, kids laughing or dogs barking, don't worry about it. It's not going to upset us facilitating today's training. But we do want to hear from you, so you are welcome to submit questions to us and we'll address your questions either throughout the webinar, I'll keep an eye on them, or at the end. There might be some questions that we're not able to answer. Please just still submit these. We're happy to get our tax experts to answer these if we can't during today's session. I'd like to introduce to you our fabulous content manager, Michelle Morgan. She works here at Wolters Kluwer. And then we have Charles Clark. He's a director of Boma, and Liz Studholme in content marketing. So right now what I'd like to do is just hand over to Michelle and she's going to take you through this presentation. Thanks everybody and thanks for joining today. Over to you, Michelle. I've just handed it over and I'll tell you when I can see your screen.
Terrific. Thanks, Susie.
Yep. That's great, Michelle. Thanks.
Okay. Good morning, everyone. So Liz and Charles and I have been working together for about 2 years to present business fitness content on the Boma platform. So it's really exciting to be able to talk to you about it today.
Looking forward to it, Michelle. Thanks for having us.
Thanks so much.
Now I'm pressing.
Sorry, I'm interrupting you. Thanks so much for having us, Michelle.
Yeah, no, it's going to be good. So this morning's webinar, we'll be looking at the changes to the rules around property investment and how this provides you with opportunities to support clients, help them mitigate risk and see opportunities, of course, assist with their tax planning and build awareness of your expertise and your brand. We'll be looking at business fitness content in Boma and how to access it and deliver it to clients. So most of the slides in the next section feature business fitness articles that we've released to the Boma platform this year. At the beginning of the year, we thought the topic accountants would most want to be talking to their clients about was the 39% tax rate for incomes of 180K and above. Both the tax rate itself and all the flow-on effects such as FBT, RWT, and the trust disclosure rules and so on. But by the end of March, it was clear that this had been completely overtaken by the government's announcements on changes to the tax rules for residential property investments. While the changes to the Bright Line test took effect almost immediately, there were further changes to the rules around interest deductibility to take effect from October, with the details subject to consultation. Now remember, till the last few years, investment property had been an area where the tax implications on sale were fairly stable, as were the rules around what you could claim as tax deductions. It was all widely understood, even by small investors who didn't necessarily think of themselves either as investors or as businesses. And there was a lot of confidence in residential property as a sound investment that pretty much just ticked away. It was good on capital gain, low on risk. But from 2015, this became something of a movable feast with the introduction of the Bright Line test. Investors who had bought and sold within a 2-year Bright Line period would be liable to pay income tax on sale. There were various exemptions, for instance, for the main family home, farming properties, and so on. But people caught by this 2-year window would be facing tax on sale. But for all those other residential property investors who'd acquired property earlier and intended to keep it for longer, nothing had really changed. And in this same period, the sharing economy was tending to broaden the base of individuals and businesses earning income from property through sites like Airbnb and Bookabatch. So the tax implications on sale were changing, but the tax rules about claiming deductions on a property investment were still in place. Until 2018, and at this point the bright line test was extended from a 2-year to a 5-year window, and the government also flagged that from the 2019 to 20 tax year, it would be ring-fencing rental losses against other sources of taxable income. So you could still claim deductions for your investment property, but you couldn't any longer offset these losses against other income when you were calculating your income for tax purposes. Then in March this year, the bright line test was extended to 10 years. There was surprisingly little controversy about that. What really attracted attention were the proposals around claiming mortgage interest as a tax deduction. From 1 October 2021, the new investors who'd acquired property from the 27th of March this year wouldn't be able to claim interest at all, and other investors would see this deduction phased out over 4 years. It caught most taxpayers who own residential property, individuals, trusts, partnerships, and limited partnerships. Companies would continue to enjoy automatic interest deductions, except for close companies and residential investment property rich companies. These would be affected. So this shook investors much more than the bright line test or the ring fencing rental losses ever had. It affected a broader base of investors, and by and large, it affected the single largest item that small property investors had always been able to claim deductions for. There was a consultation period on the details around interest deductibility. This opened in May and closed on the 12th of July. And then there was a long gap, which prolonged the uncertainty because we knew the new rules were going to start from 1 October. Then on the 28th of September, the draft legislation and the Inland Revenue fact sheets and the other documentation came out. The basics hadn't changed. Interest deductions for new acquisitions aren't available from 1 October. And for properties bought before 27 March this year, deductions will be progressively phased out. The explicit focus is on properties that can be used for long-term accommodation, houses, apartments, whether or not they're being used to provide short-term or long-term accommodation at the moment, or they might even be vacant. Bare land that can be used for residential property is also affected. Consistent with getting more housing stock into supply, there are some exceptions. Property developers can continue to deduct interest expenses, and new build properties are exempt from the interest limitation rules for a 20-year period. This is dated from the Code of Compliance Certificate. The definition of a new build is generally a self-contained residence that receives a Code of Compliance certificate confirming the residence was added to the land on or after 27 March 2020. And the new build, the bright line test for new builds that were acquired on or after 27 March this year will be over a 5-year period instead of over a 10-year period. The main family home is still exempt, as are some types of residential property, including farmland, employee accommodation and social housing, and hotels and businesses that are set up to provide short-term rather than long-term accommodation are exempt, and there are a number of other exemptions. Where a property is partly covered and partly exempt, the taxpayer can use an apportionment method to calculate how much of their interest is deductible. And there are also some provisions for how technical transfers of ownership are handled, providing rollover relief on interest limitation for some transfers after 27 March this year, and rollover relief from triggering the bright line test on some transfers from 1 April next year. Up until now, it's been about tax liability at sale and the tax treatment of losses. So the focus may yet shift to be more asset-based. We simply don't know. In the meantime, Inland Revenue has released some exposure drafts for consultation closing November. It's an interpretation of existing legislation rather than new proposals. So these look at situations at whether there is a taxable disposal when changes occur to co-ownership, subdivision, or changes of trustees. The legislation around the changes introduced March this year is currently with Parliament's Finance and Expenditure Committee for consultation till November. The important thing to note here is that this is part of a continuing conversation with clients. The legislation's not yet final. It may still be subject to change. And further changes aren't off the cards either. Some investors will be looking for alternative investment opportunities. They'll be seeking general advice from their accountants before they go to their financial advisors for specifics. Feedback from the property market so far is mixed and has had the overall effect of just prolonging the anxiety. Sorry, I'm just going to take a little sip. So the headlines, seem to change daily. There's a slowdown, there's not a slowdown, investors are holding back, first home buyers are holding back. No, they're not, they're jumping in. But it's literally all speculation until the details finalised and we can look at the impact with some kind of perspective. But with all this uncertainty, I think clients would really appreciate ongoing support and reminders about specific issues to consider. There was a surge in property sales after we came out of lockdown last year, and it's not inconceivable that we'll have another one this year. But now we have the changes to interest limitation. We've got stricter bank requirements, we've got loan to value ratios and rising interest rates. The gains are still there, though deductions are reduced and costs are up. It may be that the investors who originally chose property because they were risk averse are still risk averse, and they'll wait and see. However, their tax liability may now have changed if they can't write off interest. If they're thinking about selling, they need to be aware of the likely tax at sale. Some investors may shift their interest to commercial property or new build developments. For new builds, they need to be prepared for possible supply chain issues and delays forcing up costs. So reminding clients about budget and cash flow planning, helping them work through the different scenarios to buffer their exposure could be really helpful here. If interest rates are rising, planning to help navigate long-term debt could be useful as well. And remember, investors leave the market and new investors take their place all the time. So reinforce your messaging at intervals. People who entered the property market as first home buyers may now have acquired a rental. So they know about property as homeowners, but they now need advice on the tax implications of their investment and how to make the most of it. And for some taxpayers, this won't really click until it's time to do their 2022 income tax returns. So you might want to schedule a series of reminders towards the end of the tax year. Help clients understand if their overall tax liability goes up for whatever reason, there may be provisional tax impacts. So if there's a tax to pay on a gain on a property sale, it might push people's taxable income up and change their provisional tax liability. Interest limitation may also have an impact here. It's important, I think, to engage with clients at intervals on bite-sized topics such as the RWT changes from this month. And as always, you're under pressure to deliver outcomes to clients to reduce their exposure. Keep clients aware of the range of services that you offer. Let them know where their situations might have become more complex now and what broader tax planning services you can offer them. I know this has all been really, really broad brush, but I hope it's been helpful. In talking about navigating this continuing conversation with clients, the Boma platform and business fitness content can facilitate all of that. Charles and Liz, can you come in here to give us a bit more detail on managing this approach?
Sure, thanks so much, Michelle. As she said, there are going to be a lot of implications and a lot of opportunities to reach out and connect with clients and potentially prospects. I thought it was worth just showing you a quick stat from some research carried out by a partner of ours, Practice Web. And they've been carrying out research annually on what SMEs look for in value in accounting firms. And they did two last year, one in January 2020, and it assessed the buyer journey, what characteristics they're looking for and what they value. And in order, they came back saying it was professionalism, quality of service, professional body accreditation, and sector knowledge. So that's probably to be expected. Obviously, we know that things changed markedly with COVID. So 6 months later, midway through last year, they repeated the research. And what SMEs were looking for and what they valued had changed hugely. And they found that communication is now the #1 most important characteristic in an accountant according to small businesses. the follow-up elements had changed as well. So it went communication, sector specialist knowledge was in there, providing regular training, and so on. And I suppose the point here that we're really getting to is that in the past, maybe your clients were looking for maybe more run-of-the-mill services from you, but now with the challenges that they're facing in this new environment, the onus is really on you to get out there and support them. And as Michelle just highlighted, there have been some massive changes even in the last month or so. So what I suppose we're going to talk to about with Boma and the CCH Business Fitness opportunity is how you can use these tools to streamline your marketing, streamline your ability to support and educate clients in a way that maybe a few years ago they weren't looking for. And I think Liz has got some another stat on additional research around advisory to talk through.
Thank you, Charles. So on this slide, I think we're just really looking at, obviously, that practice web research demonstrates that new clients, and specifically that was small business, but I think that you could probably extrapolate that across a lot of clients. They're looking for more than compliance services. And obviously, further to that, we know communication is a tool for growth. This is Wolters Kluwer research that says that firms going beyond compliance and into advisory can expect higher growth than those that are just offering compliance. Well, that message we've heard a lot. Going back on that chart that Michelle shared, obviously there's lots of different ways this legislation is going to reach a very broad group of your clients or prospects, whether that's mitigating risk because you're assisting with a tax structure to mitigate the risk that they might sort of see coming ahead in terms of tax liability. There might be opportunities for some clients to take advantage of the new rules and how they approach the management of their assets. Tax planning where you haven't done it before, for example, the new rules might expose people to income tax liability and they've never needed tax planning before, but now do, so obviously new business there. And then that thought leadership piece where you can use this legislation because it is such a broad, has such a broad impact to build awareness of your expertise across social media, in your outreach kind of communications. And if you are doing that on social media, because this is something that is likely to get comments, be ready to respond to comments and questions. So let's look at how Boma and Wolters Kluwer can help you create communication about the rules. I'll just show my screen and hopefully everybody can see. Oops.
Yeah, we can see that, Liz. We can see that, Liz.
Is that control panel in the way there, Susie?
No,
or is that all?
No, that's just okay. For you. Just hit the little orange arrow and it will make it go away.
Fantastic. Okay, so we've talked about how that legislation provides opportunities to nurture, support and add value. Boma provides the tools and the content to do this. Boma is a marketing platform built specifically for accountants. For those of you who haven't come across us, you can create, if I push on the create button, it gives you probably a nice little summary. So you can create emails, you can create social posts, lead forms in order to capture email addresses for a newsletter or updates that you're sending out, and advertising on social media. The thing that makes Boma different though to other marketing tools is our content. So this is basically giving you the kickstart of a campaign. We know it's easier to edit somebody else's content than to write from scratch. So Boma has a content library for you to choose from for your emails and social posts. If I click into the content library, you can see content appearing there. Now, Boma and Wolters Kluwer are now partners. We're really delighted to be bringing their expertise within our platform. There are hundreds of articles on all areas of business advisory and compliance, and you can search on the left-hand side. So if I search tax, for example, we start to see the articles that Michelle has talked about. Here's one from Wolters Kluwer that we'll look at in a minute. We've got a broad one on the rental tax changes. If I click into one of them about the exemption on new builds, you can see what this content looks like. Boma provides the image for you for your social post, and you can change that. We have over 3 million free images to use. We provide the social post, again, written for you. You can change all of this as you go through, and here's the email. So once you've read it, you can then choose, yes, this is what I want to send. Boma will never write opinion pieces. It's that we leave that up to you. We're writing the facts. Here's what it is. Here's why it matters. Here's what you should do next, and usually a call to action. So you can use that to create an email or a social post. If I click off tax, you can also use the search bar here. So let's have a look at interest. And we've got this piece, which we will look at very soon. Interest rates rises are on the way. If you wanted to create a newsletter, for example, you could bundle a couple of these articles together to create a newsletter and of interesting information that's going to impact your clients and prospects. I'm going to change that, and now we're going to look at the libraries. So Boma partners with the Gap and with Wolters Kluwer. If you already subscribe to Business Fitness, you can add this library to your Boma subscription for free. If you are not a Business Fitness subscriber, you can create this as an add-on for your to your Boma subscription. So our partnership brings us, obviously, Wolters Kluwer is the leading provider of tax and accounting information. This is just making it super easy to share that information with your clients. So let's perhaps put in property to pull up some of those articles that Michelle has recently just shown you. The residential property and interest deductibility. Here you can see the email. There is a downloadable guide that you can click on, and that will be sent in your email to your clients. They can click on that and get the PDF. And here is the social post. If we go into this one, which we've looked at, the recent information about the interest limitation, what the ruling means, what those main exemptions are, and then a call to action to contact you, their accountant, business advisor, to talk about how the rules affect them and what they need to do, whether that's tax planning, cash flow forecasting, scenario planning, etc. Okay, so say you're happy with that campaign. Again, you can change all of this as you go. You can deliver that as an email or a social media update. Let's deliver to all channels so you can see how that works. This title was only seen by you, but you could, for example, change that to say, I'm going to send that to my clients, and then have a different one that you're going to send to prospects so that you can review it in your sent campaigns. First step, you can add something here which will be brought into every channel, or you can change it at the next stage. I'm going to open it up and see it in each channel that I want to send it to. So when you set up your account, you simply connect your social channels, you upload your contacts, or you can sync. We have sync to add those contacts into Boma, and then you can start creating campaigns. We're currently looking at your LinkedIn business. If I preview that, I can see what my LinkedIn business post will look like, and I can see that little change that I made there. Obviously, I could make a lot more changes. I might, for example, take a whole lot out here and change it. I'm going to just write gibberish just so that you can see how easy it is to make changes and preview that, which obviously is not going to how LinkedIn post will look like, but yeah, all the tools are there to make it sound like you. You can also change the image. Let's look at Twitter, and here's what your tweet will look like. Facebook's a little bit different. On Facebook, because of their combating fake news, they don't let a third-party post on your behalf. Our workaround is that you can copy and paste. Obviously, you can type from scratch and get in touch. We are here to help or something. And then let's look at email. So for emails, because we are saying that this is going to affect people in different ways, it's really worth segmenting and making sure that you're sending relevant information that addresses the specific challenges of each group within your client or prospect contact list. So you can select those manually, or you can filter using tags. So for example, I might have a tag that said, let's have a look, investment property. Now, this is a test campaign, a test account, so you're only going to see very few numbers here, but obviously you would have more numbers in your own account. So now that I've selected who I want to send that to, you can see Boma has written the subject line, the preview description, and your from address. All of that is customizable, you can change that, and then we'll select the template. When you select your template, when you set up your account, you simply add your logo, and Boma pulls the colors to create a template for your email. So it's very easy. There's no mucking around with design, and it already looks professional. So we're going to now open that email template and pull in the Wolters Kluwer content to send. Again, now you have options. You can send a newsletter by dragging in a short version of that content and going back into the content library to choose another article from Wolters Kluwer or from the Boma library. You can also, if I remove that one, you can also send it on its own because you think this article should stand alone as an email. Once you've started creating your email, again, you can use the tools to customize it. So I want to add a greeting, choose merge tags, select the first name, which pulls the name from my database and makes it personalized. I can add content in the bottom, I can change bullets, I can add more text. And if I, for example, might want them to contact us, I'll go back into content and drag in a button. What do I want that button to say? Contact us, for example. And then I can choose what action I want that button to take. So say it might be, send me an email, Liz@accountants. The subject is interest limitation and the body is, can I get in touch? Can we make a time to talk about my property investment? Preview that when you're ready to send and save and close. You can send yourself a test email, and when you're happy, schedule delivery, and you can either send it immediately, which we're going to do, or schedule it for a specific time. So there's lots of articles. If I exit now and go into the campaigns section, I can see that campaign is ready to go. My previous campaigns have gone out. I can see whether they went to email, they went to LinkedIn, business, personal, and when I click on them, I'll be able to look at the engagement rates on those campaigns. So open rates for email, click-through rates, if you had links in your email, and social, you get clicks, shares, likes, comments, impressions, etc. So that you can see how it resonated with your clients and prospects. There is a lot more that you can do in Boma, and obviously this is a very short demo. We always recommend doing a one-on-one demo with us so you can ask questions that are specific to your firm and the things that you want to achieve. So I'm going to pass to Charlie now to talk about how you can do that.
Sorry, just unmuting myself.
Right.
I think we're going to do quick questions,
Yes.
and then we can talk about that. And so, Susie, have there been any questions while we've been chatting?
Thanks, everybody. Yes, there have been. Just a reminder, just for those of you that would like to ask a question before we go into questions, you're welcome to click on the little orange arrow. Your GoToMeeting panel might have collapsed, so click on that. It'll open up a panel like I'm showing you on my screen here. Come down to questions, type that in there, and select send. So, yep, there are a couple of questions. I'll start at the first one submitted by Matt. Michelle, I believe this one is for you, just so you're prepared there. Regarding the new build, what happens if the CCC issued on the 26th of March, but title is issued after the 27th of March?
Awesome question. Look, I'll touch base with my reviewer about this, but as I understand it, the definition of the new build comes through from the Code of Compliance certificate.
Excellent. Matt's also got another question here that you may be able to answer, Michelle. Is interest still deductible for 20 years?
Oh, you're talking about from title?
I didn't say that. It just said, is interest still deductible for 20 years?
Well, if it genuinely meets the conditions for a new build exemption, then the 20-year period continues for the life of the new build, or if the new build is kind of hauled away and demolished before the end of the 20-year period. I mean, obviously, it only extends up to demolition.
Excellent.
But it goes with the ownership of the new build, whether it's passed from the initial owner to a subsequent owner.
Great, thanks for that, Michelle. There's just one final question here from Carolyn. I think this is interesting. I'd like to hear this too, Charles. This is one hopefully you'll answer. She'd like to know what the acronym for Boma stands for.
Oh, that's a great question, and Liz and I have often made up acronyms, sort of like Best of Marketing Association. It is actually a neighbourhood restaurant that Ian, who's our CEO, it was his favourite neighbourhood restaurant when he lived in London. But the other meaning in Africa is sort of a gathering meeting place. So we thought it was quite a nice name, both from a personal linkage, but also Boma being the sort of a place where you can, I suppose, put together content and information that you can then sort of share with your clients. So it's it doesn't necessarily mean anything. It's just something that had a personal connection to Ian, who's our CEO.
Wow, that sounds pretty special. What an awesome story. I've had another one here from Brendan. Brendan would like you to please explain the subscription again for those that subscribe to Business Fitness and those that don't.
So
Okay.
I could probably jump in there. Oh, sorry, Liz here. So when you have a Boma subscription and you already subscribe to Business Fitness, simply contact your solutions managers at Wolters Kluwer CCH, get your code, and you can unlock the Business Fitness content in Boma. I hope that makes sense. If you don't subscribe to Business Fitness, that's not a problem. You can add it to your Boma subscription.
Great,
Yeah, and
thanks for that, Liz.
Sorry, just while we're chatting, we've actually had quite a few people send in support tickets. Boma users send in support tickets. So we'll be responding to you, but it's basically, as Liz said, it's an add-on to your Boma subscription. And once you let us know if you're interested in it, we can set it up for you, and that just goes out on the same credit card that your Boma subscription goes out on.
Charlie, do you want to talk a bit about the Boma subscription, because that might have been the other part to that question?
Susie, it might be useful going on to the next page, because that just sort of, I suppose, has a bit of a rundown of Wolters Kluwer and Boma. So Boma itself is $99 plus GST per month, and that includes everything that you've seen in terms of the ability to send email and social. It comes with some free Wolters Kluwer library. There's obviously the premium library for an extra $40 plus GST per month. When you sign up for a trial, that's 14 days free trial, and during that time, we're very happy to give you a demo and any training that you need. And obviously, as long as you're a user of Boma, we're very happy to give you free training on any of the elements that you might have questions on. It also comes with a lot of other features that we haven't talked about today, which we're happy to talk to you about in a demo, so that you can do social ads, you can have lead capture forms on your website. We've got a Zapier integration, so if you have a CRM tool that you want to sync with Boma, we can do that. We also sync with Zero HQ, so lots of other features other than the ones we've shown you here today. Once you are a Boma user, as Liz said, you can have the opportunity to access the Wolters Kluwer library, and we do have lots of other content in Boma as well. So everything talking from compliance to management, tax, strategy, HR, lots of things that you as a business advisor can choose to send to your clients or to your prospects, and just I suppose really up your ability to communicate with them about things that are going to affect their business.
Great, thanks very much for that, Charles. There are a couple more questions here, and we do have time to go over them. There's one from Dave. This one's for you, Michelle. Does the new build exemption cover bare land purchases for new builds?
Bare land purchases.
Does the new build exemption cover bare land? So if you were going to just buy a section and not have a house.
Yeah. And for further detail on this, have a look at the commentary in the supplementary order paper.
Okay, cool. That's going
Yeah.
to be emailed out to everybody after today's training, is it, or in that fact sheet? No?
Well, I can certainly include a link to it. Yeah, that's a good idea.
Great, thanks. Natasha has asked in regards to the Boma content and business fitness content, can you pull through the database from Workflow Max?
I think that that's probably possible. We have an integration with Zapier, as I alluded to. As long as Workflow Max has an integration with Zapier, that should be possible. What we suggest is to basically reach out to us with what it is that you want to do, and then I'll get Andy, who is one of our development guys, to basically explain how that would work. He's often helped people set it up. That integration. So very happy to help you there in person.
Thanks very much, Charles. Donna has just asked if you already subscribe to Business Fitness, is there an extra cost for Boma?
No, so if you're already a Business Fitness subscriber, there is no extra cost for the library in Boma, but you do need to be a subscriber of Boma itself.
Just one more question coming through here. Michelle, I believe this might be one for you. Do you have guidance on property that is purchased, i.e. an existing house and a large section, which is then used to put new builds on it? How would you propose apportioning the interest costs across the sections?
Well, as far as I can understand from the commentary and the bill, apportionment is going to be on the area, how much of the section is counts as the main family home and how much of it counts as what you're developing.
So you'd have to get out your tape measure and measure that, I guess.
Absolutely, yes.
Hey.
Yeah.
Cool.
So
That's it for questions.
I was just going to reiterate there that we will follow up with sort of FAQs, some of the things that have been asked today in follow up from this webinar.
Yeah.
Great. There will also be a copy. Sorry, Charles.
Oh, I was just going to add, sorry, to the previous question answered. If you are a Wolters, a CCH Business Fitness client, but not a member of Boma, there is a discount that you can access. So that's something, if just something to speak to your account manager about, and they will give you the discount code.
Excellent. If any of you are on the call and don't know who your account manager is, you're more than welcome to contact me directly. You should all have my email address, susiehardy@wolterskluwer.com. Sorry, that's susie.hardy@wolterskluwer.com. I'd like to thank you all for attending the webinar. That's all the questions we've got. Liz, Charles, Michelle, I'll allow you to say your goodbyes, maybe starting with Charles, Liz, and then Michelle. Thank you.
Yeah, thank you so much, Michelle and Susie, for having us on, and thank you everyone for your time today. Really enjoyed it.
Thank you, Wolters Kluwer, and great to be able to present to everyone. Please do reach out with any questions. Obviously, there'll be links in the follow-up emails, but yeah, we hope to hear from you.
And I can only really follow up by thanks everyone. It was great to be able to present with you all, and thanks Susie so much. If anyone has further questions for me, Susie can refer them on to me.
Yeah,
we'll
sure will.
Thank you.
Excellent. I will end the webinar now. I wish you all a good rest of today. Thank you for attending. Bye-bye.
Thanks a lot. Bye-bye.